Good morning, good afternoon, and welcome again to the latest ADM Agriculture YouTube market update. Well, it was USDA week, and last night we got the eagerly awaited quarterly update on old crop ending stocks, as well as the USDA's first update on what they expect the US farmer to plant this spring. This report was billed as potentially explosive to the market, and the USDA certainly didn't disappoint us. The numbers that were published on both corn and soybeans were very bullish. And whilst there was nothing particularly bullish in the report for wheat, in fact, it's probably actually pretty bearish for wheat, there wasn't enough to overcome the bullish tone from the other ag commodities. The stocks figures were, well, largely in line with what was expected. But it was the prospective plantings report on both corn and soybeans that were significantly lower than the average range of trade estimates and leaves the US balance sheet with some real issues. The market now either needs to buy more acres or reduce demand, and really this points to higher prices. I mean, based on these forecast areas, combined with normal yields and what people are talking about from a demand point of view, it could well leave the US with an almost unworkable carryout at the end of the 2021-2022 season. This planting forecast means that the markets will now be acutely sensitive to weather in the US throughout the summer growing season, and any hint of a drought will be seen as supportive. I think it's also worth coming back just to touch on the old crop ending stocks figure. And whilst last night's numbers were largely neutral and in line with expectations, we wouldn't be surprised if they didn't get adjusted lower again as we go through the season. US exports may well be reflected in higher numbers, and with US moving out of lockdown, perhaps ethanol consumption could also increase, increasing corn usage and potentially further reducing ending stocks. Last night, the market reacted, as you would expect, in a very bullish way. Corn was locked limit up and stayed there for most of the session. Wheat followed it, trading higher. And whilst the wheat report was in isolation pretty bearish, with higher ending stocks and forecast acres than the average range of trade estimates, we would probably say that the sell-off in wheat had already happened. I mean, certainly when you look at this graphic here, it highlights that since the start of March, we've seen wheat depreciate in value quite significantly versus corn, whilst corn values have stayed pretty flat. And we've seen the gap between wheat and corn widen significantly. So it's going to be interesting to see how the market deals with this need to either increase corn acres or ration demand to solve this tight corn S&D. Could we see Chicago wheat and corn back at parity? Is there going to be enough switching of demand, so wheat being used in place of corn to underpin wheat's relative value? Lots of questions that still need to be answered, but what is clear, based on those USDA numbers, we have an incredibly tight corn balance sheet, and this summer's weather is going to be more important than ever. If you have any comments or questions about these reports, please don't hesitate in getting in touch with your ADM farm trader, or alternatively, reach out to us directly through the contact details at the end of this video. Thank you very much for watching. Have a great day. Enjoy your Easter. Thank you.